They're called the sacred cows of the tax code. That's Washington speak for tax breaks that are so popular that Congress never wants to mess with them. Oh yeah, these are real cows. We'll get back to them in a minute. These cows are deeply ingrained in the US tax system, loved by interest groups and lobbyists, and preserved for decades because of the political costs of challenging them. But if you want to lower tax rates, turning sacred cows into cash cows is an obvious way to find lots of moolah to pay for that. Today we're going to meet the sacred cows and see what Republicans want to do with them. I'm Richard Rubin, and we're talking taxes. First up is ESI, spelled ESI for employer-sponsored insurance. This is the healthcare you get from work. When your employer pays you $1,000 in cash, you have to pay taxes on that. But when your employer pays you with $1,000 of health insurance, you don't have to pay taxes. Economists hate this cow because she encourages excessive healthcare spending and reduces tax revenue. But she's really popular, so she's safe. Next, let's meet Jersey. She matters a lot to residents of New Jersey, where we are today. This is the deduction for state and local taxes. Right now, you can deduct those taxes from your federal income. The bigger your state and local tax bill, the bigger your benefit. That's really important for high-income residents of high-tax states. Republicans don't have much of a stake in those states, and they're ready to put her out to pasture. The reason? They want to use that money to lower tax rates. We'll see if House Republicans from New Jersey, New York, and California let that happen. Now let's meet Homie. This is the deduction for home mortgage interest. This tax break drives up home prices, though it's not clear if it encourages home ownership. She's old, and she's loved by homeowners and real estate agents, and by home builders. That's why she's sacred. We'll come back to Homie in a bit. Last, there's charity. This is the deduction for charitable contributions. She saves taxpayers money, and almost everyone loves her. How could you not? Now let's talk a little more about Homie and charity. Because they're really popular, Republicans don't want to get rid of them. But they're proposing some changes to the tax code that would squeeze them in important ways. Still with me? Okay, so here's what we've learned. Now we're going to talk about the money. And since we're here, we'll use milk instead. Right now, here's roughly the way it works. You see how much you get from Jersey, Homie, and charity. These represent your state and local tax payments, your mortgage interest, and your charitable donations. Let's look at one example. Say you get $6,000 for Jersey, $5,000 for Homie, and $4,000 for charity. Then you see if it can fill up this bottle. This is your standard deduction. For a married couple right now, it's $12,700. If it comes up short, the IRS fills up the rest of the bottle and you take the standard deduction. If it's about to overflow, put it back in the bottles. You can deduct what's in them instead. In this case, because you can fill the little bottles instead of the bigger bottle, every additional dollar of mortgage interest and donations, that's the milk from Homie and charity, turns into tax savings. Here, you get $15,000 of deductions instead of $12,700. Republicans want to take Jersey off the table and nearly double the standard deduction, making that container much bigger. So what happens when you do that? Let's see. Ignore Jersey because Republicans want to get rid of her and cut tax rates instead. Meanwhile, with a bigger standard deduction, it now takes more from Homie and charity to fill up this larger jug. If you're just getting the standard deduction anyway, the bigger jug, you've got less incentive to get a large mortgage or contribute to charity. Those additional deductions become utterly useless. Today, 70% of Americans take the standard deduction. With the bigger jug and no Jersey, it would be 95%. The bigger jug could mean lower taxes for millions of people. However, that benefit could really be a lot smaller because Republicans also plan to repeal the $4,050 per person personal exemption. As Congress tries to figure this out, the sacred cows are making themselves heard in Washington. Tell me what you think. Email me at richard.rubin@wsj.com or tweet me at richardrubindc. They want to use that money to